On July 11, 2025, the US government stunned the world by announcing a sweeping new tariff, 35% on most Canadian goods. The announcement came not through diplomatic channels but via President Trump's post on Truth Social, amplifying the shock and confusion. Businesses on both sides of the border had less than 3 weeks to brace for impact. This wasn't the first tariff. Earlier in March, a 25% tariff had already been imposed, but this new move was a dramatic escalation. Trump's message was clear: if Canada retaliated, the US would raise tariffs even higher. The White House was using economic pressure, not negotiation, to force Canada's hand. The timing was especially jarring. Just days earlier, Canada had withdrawn a planned digital services tax, hoping to ease tensions. Canadian leaders thought this would open the door to talks, but the US move signaled otherwise. The gesture of goodwill was ignored, leaving Canadian officials blindsided and frustrated. The international community watched with concern as two of the world's closest allies veered toward confrontation. The US and Canada share one of the world's most integrated economic relationships. A trade fight of this scale between such close partners was unprecedented. The sudden tariff hike wasn't just about trade, it was a public display of growing friction, raising questions about the future of their partnership. The shockwaves were immediate, and the world wondered what would come next. The Trump administration justified its tariffs with two main arguments: Canada's digital services tax and border security. The digital tax targeted US tech giants like Google and Amazon, which Washington called an unfair attack on American companies. Trump threatened to halt all trade talks unless Canada dropped the tax. The second reason: national security. The White House accused Canada of not doing enough to stop fentanyl from crossing the border. Trump linked tariff relief to Canada's efforts on drug enforcement, turning an economic dispute into a security standoff. Canadian officials pushed back, citing data showing less than 0.1% of US fentanyl seizures came from the northern border. Most illegal fentanyl enters through Mexico, not Canada. Critics argued the US was using security as leverage for economic gain, blurring the line between protection and protectionism. The result? A tangled dispute, with no easy resolution in sight. Before the tariff shock, Canada tried to diffuse tensions by scrapping its planned digital services tax. The tax was meant to ensure tech giants paid their fair share, but it became a flashpoint with Washington. Under intense US pressure, Canada withdrew the tax in late June 2025, hoping to restart trade talks. It was a major political concession, sacrificing a popular policy for the sake of economic stability. Ottawa expected the US to reciprocate, but instead the White House doubled down with even higher tariffs. The move blindsided Canadian leaders, showing that de-escalation wasn't enough. The US seemed determined to impose tariffs regardless of Canada's actions. Canada's attempt at peace had failed, leaving it with fewer options and a more unpredictable partner. The government now faced a stark reality. Traditional diplomacy was getting nowhere. The trade relationship had entered uncharted territory. Canada was forced to rethink its entire strategy for dealing with Washington. The 2025 trade conflict was months in the making, fueled by escalating tensions between President Trump and Prime Minister Carney. Trump's inaugural address set the tone, announcing tariffs on Canadian goods and citing the fentanyl crisis. Tariffs were briefly paused, then reimposed in March, targeting steel, aluminum and autos, key industries for both countries. Each new measure deepened the rift, making diplomacy seem impossible. A G7 summit in June offered a glimmer of hope, but talks quickly collapsed. Canada withdrew its digital tax, but the US responded with even harsher tariffs. The feud played out in public. Trump's social media blasts met with Carney's measured but firm responses. The dispute became personal, a test of wills as much as policy. The leaders' public sparring only heightened the stakes. The trade war was now as much about pride and politics as economics. The US-Canada trade relationship is massive. Over $762 billion in goods traded in 2024, or more than $2 billion every day. This commerce supports millions of jobs, from factory workers to farmers. Canada's top exports to the US include energy, vehicles, machinery, steel, and aluminum, critical to American industry. The US in turn sells billions in cars, chemicals, and technology to Canada, its largest export market. When tariffs hit, both economies feel the pain. In 2024, Canada exported $412.7 billion to the US and imported $349.4 billion, creating a $63.3 billion surplus. President Trump has focused on this surplus, calling it unfair. But economists argue the real story is the mutual benefit and deep integration. Disrupting this flow risks jobs and growth on both sides. The stakes are enormous for workers, businesses, and communities. The world's largest bilateral trade relationship is suddenly on shaky ground. US-Canada trade isn't just about buying and selling, it's a single, integrated system. In manufacturing, especially autos, parts cross the border multiple times before a car is finished. Tariffs disrupt this supply chain, raising costs and threatening jobs. The integration extends to agriculture, technology, and energy. Canadian crops are processed in US factories. American tech firms rely on Canadian talent. The energy grids are linked, with electricity and gas flowing both ways. An economic shock in one country is felt instantly in the other. Tariffs act like a wall in the middle of a shared factory, creating chaos and uncertainty. Businesses now face tough choices: adapt, relocate, or risk losing out. The deep interdependence makes this trade war uniquely painful. For both countries, the cost of conflict is high and rising. With Washington unpredictable, Canada is rethinking its strategy. For decades, its economy revolved around the US, but the tariff fight exposed the risks of over-reliance. Now, Canada is pushing for trade diversification, building stronger ties with Europe and the UK. Prime Minister Carney has been meeting with European leaders, signaling a shift toward new alliances. Canada already has a trade deal with the EU and is working to expand it. The goal: open new markets and reduce vulnerability to US disruptions. But diversification is a long-term project. The US will remain Canada's top partner for years. Building new relationships takes time, negotiation, and investment. For now, Canada must balance finding new friends with managing its most important and most difficult neighbor. Despite the trade war, US stock markets hit record highs after the tariff announcement. Investors betting Trump's threats might not stick. But businesses in autos, steel, and agriculture are already feeling the pain of higher costs and disrupted supply chains. Public anxiety is rising in both countries, with fierce debate over jobs and prices. The biggest question: the future of the US-Mexico-Canada Agreement, or USMCA. The deal is up for review in 2026, and experts now doubt it will be renewed amid such tension. If USMCA collapses, the economic fallout would be massive. The US has threatened even more tariffs, including a 50% tax on Canadian copper. A diplomatic breakthrough is possible, but for now the relationship is under severe strain. The fate of North American trade hangs in the balance. The world is watching to see if these old allies can find a way back to cooperation.